Hey, Joe, good afternoon. How are you?
Good. How are you, Mike?
Good. Welcome to another episode of the Market Mortgage Update with Mike and Joe.
Yeah,
March Madness.
Yeah, it's upon us.
It is upon us. But before we move on to March, just want to kind of quickly do a little recap on the month that was. And obviously last month we had our annual Survive and Thrive event, which we appreciate everybody that came out. It was a lot of fun, but moreover, I think it was a really informative session, and we got some really great feedback, and just some of the highlights that I wanted to share. And Joe, you feel to add as well is one, the feedback that we received is, and some of what you're going to talk about here in a minute, is just the ongoing positive feedback that we get on the data that we share, that we've been now sharing for over 2 years on just the, by zip code, the number of sales, average list price, and so forth. So, Joe, maybe you could just kind of tell us, again, why we're doing that, how it's being used, and then let's segue into what February looked like because it's still hot.
Yeah, I think so. We do track, for every application that comes into GRB, we track what that house was listed for, what it sold for, and then we aggregate all the data and provide it by zip code so we can get to an average percentage over list. And then we also identify if there were any appraisal gaps in those zip codes as well. And it really gives our real estate partners a lot of data to have at their fingertips to be able to share with buyers, prospective sellers as to what's going on in a particular zip code. If you're looking at selling, when is a good time to sell? We've beat your story to death on on when you sold your house.
Right.
But, that timing is very important when it comes to that. And we're starting to, the market today is still a very hot market. It's still very low inventory, very high demand. So we're seeing so much of that, high over ask, trying to win these offers, particularly in those, $150,000 to $350,000 price range. Houses listed there are typically going anywhere from, 50 to 100,000, 120,000. We've seen over ask.
Right.
And, it really ultimately is, what is the value of that? What is the true value of that house? Right. And where, is it priced lower to draw the attention, which we're seeing in some markets. And, that's working because it's driving quite the frenzy as far as buyers are concerned. And I'm getting a lot of traffic through the house, and whereas in the higher price points, if it's priced appropriately, sometimes that's enough to do the trick.
Yeah, I think the other thing that we talked about, which was I think encouraging to see, is just we've seen this year an uptick in the number of FHA and VA offers that have been accepted.
Yep.
Where last year that was really tough to see. So obviously those buyers that are putting less down are in certain areas getting their offers, through and accepted. What are some of the things that maybe we glean from this conversation in regards to why those offers are getting accepted today and maybe they weren't at this time last year?
Yeah, I think, it's finding the right house, right? Mm-hmm. And it's the availability, and it's, having the conversation, whether it's, you can strengthen your offer with the pre-approval, or you can guarantee some repairs on the home. We're seeing, more in the city, right? We're seeing more of those FHA offers accepted. One of our hotter zip codes with a 14609 in February, 25% of the offers, so 2 out of the 8 that were accepted there were FHA. Mm-hmm. And so, the question you got to look back at is, were those houses sitting a little bit longer?
Right.
Were they fresh on the market? Were they the only offer going in on the house? Did they beat out something else?
Right.
And just were higher in price, and the seller was willing to take the deal. So I think there's, and that was the one thing that we found. And, this event is a great event that we host, every year, because it really shows the collaboration amongst the agents.
Mm-hmm.
The agents are always willing to work with each other, but also more importantly, learn from one another.
Right.
And just try to help them, just because your offers are getting accepted over somebody else's doesn't mean that you're beating that person out, right? They're still willing to help and kind of talk about why this offer got accepted versus another. What are some strategies that they've shared amongst the groups, and then some good things that come out of those.
Yeah, I think the other piece that was really good was, really just, people better understanding, how an appraiser comes up with a value, on a house. I think there's a lot of myths out there, and I think Tony did a good job of kind of walking folks through kind of how he approaches an appraisal and some steps I know that that we take to really try to help vet out what an appraisal might could. We can't guarantee what the value will come in at, but really trying to give people a sense of where that value will land. Maybe you can kind of speak to that a little bit.
Yeah,
Joe.
I mean, because that comes into play when are you deciding, are you going to guarantee an appraisal, right? If you know that, roughly an appraisal should come in around where you're going in your purchase price,
right?
Then you can, talk about, that can be talked about with the loan officer and the agents to say, hey, listen, we spoke to a couple of our appraisers. They feel comfortable in this price range. Our borrower's writing in that price range, so they're willing to guarantee that appraisal, should the value come in short. And that really helps us. We're seeing that, that's like a normal in the offers that are winning that we're seeing is appraisals are guaranteed, even if they are going 50,000 over ask. A lot of times doing the homework up front can help to kind of ease that concern a little bit.
Right. One last thing, guys, I'm just pulling this up because this is, if anyone wants a summary of that could not attend, we have these here in our office. Just reach out to us. But one of the things that I just kind of want to close with where we ended the event was really to give folks kind of an update on where, where we think rates are going, right? Obviously, again, forecasting rates is like weather. You do your best job that you can. It's not always right. But there is a consensus that probably starting in June that rates will begin to come back down. They've been, really we've been in the high sixes right now, that rates will come back down to the mid to low 6% range, and that's going to help out a lot. So I think we really tried to give an update on where rates are going, and just want to remind everyone that, again, that GRB, we've got some great programs out there. We launched, Joe, as you know, last year, the rate relief program to really help people, knowing that if they do refinance by the end of 2025, GRB is going to pay for most of those costs when they refinance, should rates come down. And then shortly after that, we launched Rate Relief Plus. And just to remind everybody, Joe, how does that program work and why should people want to consider it?
So the Rate Relief Plus is the lender-funded buy-down. You can get your payment based on interest rate about 1% lower than where it would be today for the first year. That money's put into a buy-down account by GRB. So it's funded by us and, allows you to have a little bit lower payment, give you some flexibility, as well as hedge against the fact that rates will come down and you can refinance as well.
Right.
So
great. All right, Joe, let's shift gears. So what did the market look like for February? What did the stats look like?
So, just looking at, we look at Monroe and surrounding counties, as well as Onondaga and surrounding counties, really the two main areas that we serve. So in Monroe County, just on its own, on average, houses were going 11.5% over ask. In Monroe, when you add in the surrounding counties, it comes down to about 8.92% over ask. We are looking at kind of what were the hottest zip codes in those markets. So coincidentally enough, 14607 was the highest over ask. There was 2 offers, averaged 35% over ask. In 14609, we had 8 offers accepted, 2 of them being FHA, with an average of 20.93%. And, we really try to look at, the number of offers in these markets, because 1 doesn't really tell the story. 2 kind of is, borderline. But, where you see 8 offers being accepted, and I'll talk about what the coincidence is between those 2 in a minute. Going over to Onondaga County, 6.6% over ask in Onondaga County, 6.2% in Onondaga and surrounding, so pretty similar. 13212 North Syracuse, we saw a 27% over ask average. It was only 1 property, but kind of paints a little bit of a picture of what's going on there. And then surprisingly, 13021, which is Auburn, Cayuga County, we had the most offers accepted there with 5 of them. 3 of them were FHA actually, and average over ask there was 6.7% over. So, still high, but given that average over ask. When I talk about 14607 and 14609, those are those borderline East Irondequoit, kind of North Winton zip codes. Irondequoit actually came up on a Realtor.com ranking recently as being the number 1 top 10 markets for first-time home buyers in 2024. And that looks at This study looked at 25 to 34-year-olds, the availability of homes in that area, active listings per thousand, which seeing as there's, those higher numbers of offers getting accepted, it seems like it probably, if we looked at over time, how many, homes were listed in those zip codes. Affordability and home price growth, right?
Mhm.
We know that Rochester has kind of seen a 12% year over year home appreciation
Right.
percentage. So taking all those things into consideration, Irondequoit was actually ranked number 1.
Wow. That's
in the
exciting.
country.
That's
Yeah.
great. That's cool.
And then just another, recent ranking for Rochester. Rochester was ranked the number 9th best place to live for quality of life, based on low cost of living, high quality of schools. There were some other things that came into affordability and things to do, et cetera. So Rochester
It's a
continues to
great
be
place
in
to
the news
live,
in
great
real
place
estate.
to buy. It's awesome. That's awesome. So, well, Joe, let's shift gears. So every month we talk about, the GRB Power Tools. And again, just to remind everybody, this is what we've tried to do is to create a toolkit where, again, a majority of the business that GRB does is a result of a referral from a realtor. That's where we spend most of our time, and we appreciate those referrals. So we wanted to create tools to help them be more successful agents, to help them sell more homes. So this past year, as you know, Joe, we launched the Total Expert platform, which is a marketing platform for us as well as realtors. And tomorrow we're having an in-person as well as a virtual training session on this to really introduce it to the agents so that they can become more effective. You want to give a little bit of a snapshot of what Total Expert can do for the realtor and how it can help them be more successful.
Yeah. So, each agent can use it as their own CRM.
Right.
They can communicate back and forth with the loan officers in there. They gain access to all of our marketing materials.
Mm-hmm.
So all of our pre-created print marketing where they can co-brand it with a loan officer. So both their informations will show at the bottom of it. A good way to just, if you need quick flyers or something, just jump in there, print them out. All of our social media posts, they have the ability to integrate with their Facebook. So they can directly post on there with co-branded materials for social media. It's a lead management software. So,
Mm-hmm.
a lot of times, talking to some of the agents that have expressed an interest, it's, I need a way to remind myself to get back to those people I talked to 3 months ago that may have tailed off, right?
Right.
And we see that a lot with loan officers. We're looking at what's in front of us because there's always so much right in front of us that
Mm-hmm.
sometimes what happened 2-3 months ago, we kind of goes by the wayside. And a lot of times one of the reasons we rolled this out internally for our loan officers is we wanted to be able to stay in contact with those people,
Mm-hmm.
and give ourselves a better opportunity to convert those down the line, which, having that CRM and the ability to set follow-ups and do so, reminds yourself to do that. And then, we have within the tool, there's single property websites that can be created. There's lead capture apps. All the stuff we'll cover tomorrow, but it really gives the real estate partners an additional tool to be able to
Mhm.
use for their own betterment, right? To be able
Right.
to be a better agent because they can track and follow up on their leads, and
Right.
gives them access to some of our marketing materials as well.
Right. So we're excited. We are going to tape it.
Yep.
So if you can't make it, we'll push it back out. And this is something that is really going to be ongoing, Joe, right? This is not a static platform. We're going to be looking for people's feedback on this. We want the realtors to take a journey with us on
Yes,
this as well.
absolutely. Our marketing team has done a great job kind of putting it together and always looking for ways to improve and be better with it. So
Right.
any feedback is more than welcome.
Yeah. Okay, well, let's move on. So myth busters. A refinance can only help to lower the rate. So Joe, you want to kind of debunk that myth, and I'll chime in as needed.
Yeah, you touched on this a little bit, just with rates dropping, right?
Mhm.
We know that, as everybody's waiting for those rates to drop so we can see that increase in mortgage volume, because we've been writing mortgages in the 7.5% range for the
Mhm.
last year roughly.
Right.
So, when rates do drop, typically that kind of causes a refinance boom. And a lot of times what we see when people are looking to refinance is, one, can I lower my payment, right? Can I
Mhm.
lower my rate? But when you look beyond rate and payment, what are some of the other things you can do? So, with that 12% appreciation rate, equity builds pretty quickly in a home. So if you needed some cash to do some home improvements or potentially pay off or consolidate some debt, sometimes rolling that debt in to a refinance allows you to lower your payment, but also maybe even lower your term. Because if you factor in those payments you're making on those credit cards and you apply that to your mortgage, you can actually, pretty significantly reduce your term depending on how much debt you're able to roll in and pay off.
Right.
Shortening the term is just going from a straight 30-year to a 15-year. We saw this a lot in 2020 when rates were in the twos.
Right.
Everybody said, yeah, you know what, I can take that 2% because my payment's only going up $100 a month and I'm going to pay off my mortgage 15 years earlier, which creates a ton of savings for people.
Right.
Conversions from an adjustable rate to a fixed rate mortgage. There were some lenders out there with some very low rate ARMs over the past couple of years when the market was a little bit higher. So borrowers may have jumped into one of those ARMs, banking on rates are going to go down or I'm only going to be here for a little bit of time. So usually converting those, tapping into the home equity, right, is cash out refinances as we see the appreciation rates go up. I touched on that a little bit, but each situation is unique. I mean, one of the areas that we see a lot of refinances as well, especially now, even where rates are a little bit higher, is in a divorce situation, or you bought a house with somebody else and you want to buy out their interest. The unique thing about that is that's actually can be treated as a rate and term refinance versus a cash out, which allows you to go to a higher loan to value than a cash out normally would. So typically a cash out is capped at 80% loan to value, whereas a rate and term, you can go to 95.
Right.
So if you have to buy out an ex-spouse, you do it through a rate and term refinance, and that money's paid directly out of the equity of the home to the ex-spouse, and allows them to get to a higher loan to value than they normally would have and come out of pocket with less cash.
Right.
So that's an area where we see that quite a bit.
Yeah. Well, Joe, thanks for that feedback. And kind of the last thing I just wanted to kind of put out there is, Joe, we've been obviously involved with this podcast now for about a year and a half, maybe a little less. Obviously, we used to start every podcast talking about the bills and how things were going. Obviously, we got to wait till next August to pick up on that. But I think what we're really looking for from the folks that are listening right now is to really share with us what specific topics, questions you feel are top of mind that we really need to address that's going to help you in your day-to-day business. So we encourage you to reach out to us. This year, I just was on a call with a team, and they were asking me, again, my opinion on what do I think is going to take place this year, because this is an election year, and really, again, it's just, an opinion, but obviously, typically during an election year, typically you would see, rates moderate. You might see some traction, in regards to new programs to help home buyers, but that's just one question that's out there that we want to dive into. So we just encourage the people that are listening to reach out to us, let us know the things that are really kind of keeping you up at night, so that we can, try to address those things.
Yeah, absolutely.
So Joe, with that, we thank everybody for listening into our podcast.
Don't forget to like and subscribe.
And don't forget to like and subscribe. And one last thing too, we will be having our March Madness promotion that will come up. It's something that we do and with the NCAA basketball tournament. It's fun for agents to do, and it's a way for GRB to get back to the community. So
yeah,
more to come
coming soon.
Yep, coming soon. Thank you.
All right.
See you.